Can you invest in Bitcoin without actually purchasing the cryptocurrency? Well, yes, you can with Bitcoin ETFs. A Bitcoin exchange-traded fund, or ETF for short, is an investment vehicle that tracks the market price of Bitcoin, allowing you to ride the Bitcoin wave without getting your feet wet. In essence, there are two types of Bitcoin ETFs, spot and futures-based. Spot Bitcoin ETFs invest directly in the cryptocurrency, while futures-based ETFs hold contracts predicting Bitcoin's future price. Now that we've established what Bitcoin ETFs are, let's delve into their history. The journey of Bitcoin ETFs begins in 2013 with Winklevoss Capital Management. This was the year when the Winklevoss twins, famous for their early involvement in Facebook, made the pioneering attempt to introduce a Bitcoin spot ETF. This type of ETF would allow investors to gain exposure to Bitcoin's price movements without owning the cryptocurrency directly. Yet their application was denied by the U.S. Securities and Exchange Commission, or the SEC, 5 years later in 2018. Despite this initial setback, the pursuit of a Bitcoin spot ETF didn't end there. Over the years, numerous financial institutions have followed in the Winklevoss twins' footsteps, attempting to gain regulatory approval for a Bitcoin spot ETF. Unfortunately, all these attempts have been unsuccessful. However, it's not all gloom and doom in the Bitcoin ETF space. While spot ETFs have had a tough time gaining approval, Bitcoin futures ETFs have been more successful. These ETFs, which hold futures contracts over Bitcoin, have gained widespread acceptance, offering investors another way to tap into the Bitcoin market. Despite these setbacks, the crypto community remains hopeful for a spot Bitcoin ETF. The landscape of Bitcoin ETFs is rapidly changing. A wave of filings for spot Bitcoin and Ether ETFs has breathed new life into the crypto market. These ETFs aim to track the market price of the underlying crypto asset, offering investors exposure without the need to directly purchase the currency. This recent development has sparked expectations of a shift in regulators' stance on spot Bitcoin ETFs, particularly following a legal setback. Simultaneously, there are ongoing dialogues between the Securities and Exchange Commission, or the SEC, and fund sponsors. These discussions are paving the way for future developments in the crypto ETF space. Grayscale, a notable name in the crypto world, recently proposed converting its flagship product into a Bitcoin spot ETF. However, this proposal was turned down by the SEC. Despite the challenges, the future of Bitcoin ETFs looks promising. So what does the future hold for Bitcoin ETFs? Well, there's buzz around the possible approval of a spot Bitcoin ETF in the United States. This would be a game changer, allowing investors to gain exposure to Bitcoin's price movements without directly owning the cryptocurrency. This optimism isn't baseless. Australia has already made strides in this direction, launching their first Bitcoin spot ETFs back in May 2022. The potential benefits of such ETFs are numerous. They could enhance market liquidity, aid in price discovery, and draw in institutional participation. However, the road isn't without its bumps. Risks like volatility, cyber theft, and regulatory uncertainty remain. While the path to a spot Bitcoin ETF has been rocky, the journey is far from over. So, there you have it, the exciting world of Bitcoin ETFs. We've journeyed through the concept of a Bitcoin ETF, its historical challenges, recent developments, and potential future outcomes. The prospect of a spot Bitcoin ETF approval is tantalizing, promising to bridge the gap between traditional finance and the crypto realm. Stay tuned for more updates on Bitcoin ETFs and their potential impact on the world of crypto investing.